Do earnings matter to stocks right now? Because yesterday it doesn't seem like they did too much.
Well, I mean, I think so. I don't think the headline number as much matters because everyone expected that we'd probably see a negative year-over-year earnings number. Really tough comparisons. Obviously, global economy in slowing mode, but a large percentage, at least what I calculated in the first 2 days of the week, we had 80% of companies beating on the earnings side. And I think it is, though, you talked about Japan coming back. That's not because Japan's economy is doing great right this second. I think a lot of that is the markets are moving ahead and really signaling at least that the economy's starting to pick up some steam, maybe an overstatement, but at least stabilize and perhaps, get a bit of a turn. Again, that's what it's signaling. We'll see if it plays out that way.
The question, Bill, that I get out there in the real world at airports and on the streets, from our loyal CNBC viewers, and I'm sure you get it the same, is, gosh, what's it going to take to move this market? We've got trade, we've got Brexit, we've got earnings, and yet nothing seems to impact the overall markets that much. Why is that?
I mean, I think it's because we still have a good earnings. If you really get down to it, earnings are what really matters in the long run. Yes, like I said, it's a little bit of a tough year-over-year comparisons for earnings. But if you're looking for some sort of, return in a very low interest rate environment, I think it still is the place to be, despite all those things out there. And we've seen, some positive move. Unfortunately, I can't put any to bed, right? We think we're in a good space on Brexit, but you nor I can tell you for sure whether we'll get there. But we think the odds are less that it's a no-deal Brexit. I can't tell you much more than that. And on the trade front, we've obviously, well, maybe not so obviously, but we think we're at phase one. We haven't signed the deal yet, but we have moved in a better direction. And I think central banks have obviously, we all know, they have gotten involved. Rates are lower. So, I think that's what you're seeing is the markets playing the reflation trade because you're seeing some better news out of the more cyclical companies.
And the market seems to be saying, Bill, that there is no U.S. economic recession on the near-term horizon. Would you agree with that?
I agree, and I think I've been on talking to you a number of times saying people were overreacting to even the numbers we saw. We really never saw a high percentage chance of a recession here in the short order, and that's even receded further at the moment.
Answer this question. The best place to invest your money, your client's money, right now is where?
I mean, I think you stay to that more cyclical trade because the really safe things, or what people think were really safe, continue to be very expensive. So I think the industrials, even consumer discretionary, I don't think the U.S. consumer is dead. Clearly, it's what's keeping our economy going.